is the automobile industry till date, and that is oil. We're now given to understand that the discount on Russian oil, Karthik, is now down by as much as 87%. I think my first question to you on behalf of our viewers will be, does this mean oil prices are going to go up?
Absolutely. And that is bad news on many accounts. Now, let's try and put this into perspective. Ever since the Russia-Ukraine war broke out last year, there were sanctions imposed on Russia, and those sanctions prevented Russian oil being sold directly in the US and European markets. And US and Europe both are guzzlers when it comes to oil. So is India, so is China, but not in as much measure as US and Europe, if you look at these two primary markets. Now, India, of course, has always been an oil importing nation, and one of the biggest damages to India's current account deficit, or trade deficit as we call it, the difference between India's imports and exports. Why India always stays in a deficit is because of our oil, right? The import bill that we have on oil. In fact, last fiscal, if numbers serve me correctly, our oil import bill was about $160 billion. Now, $160 billion of oil bill when 40% of our oil was being procured by Russia, which gave us a discount of up to $25 to $30 per barrel, as opposed to what was available in the open market. And I think oil prices have roughly ranged between the $65 to $70 per barrel, right? Last year, at some point when OPEC was cutting production to level prices, the target was to take it up beyond $80 per barrel. But if you were to look at a benchmark of $70 per barrel and a discount of about $30 per barrel from Russia, which accounted for 40% of our oil bill, I'm talking about Russian oil being bought by India at about $60 billion or so. This is after the discount. Now, if this discount were to almost go, 87% is almost knocking off the entire discount, right? If this discount was to go, and if oil prices were to be sold at par with, let's say, the OPEC regions at about $70 per barrel, then you're looking at a dent of another $30 to $40 billion on account of Russian oil alone. Now, this has, of course, a direct impact on current account deficit, a direct impact on trade deficit, the difference between export and import. But it also does not make the oil that gets refined in India, the Russian oil getting refined, let's say at the Jamnagar refinery of Reliance Industries, being exported via the sea route to Europe after the value addition that happens, being exported to Europe. Now, even that export becomes expensive. So overall, the export that India does on refined oil does not become very lucrative. So India's exports are likely to shrink, and India's import bill is likely to rise. So we are talking about a precarious situation with respect to the current account deficit, and more expensive oil also means more payments perhaps in dollar, right? If we are still trading with Russia, perhaps in yuan, but then yuan and rupee also may be exchanged via the dollar route, I don't know. So you are talking about, let's say, an equal measure of import now, the 40% share that we had on Russian oil being split equally between Russia and, let's say, the rest of the world. Now, that gets traded again in dollar terms. That means we are buying more dollars to pay in dollars, weakening our rupee. So overall, when you look at the macroeconomic scenario, this is not good for India's overall GDP growth, financial health, current account deficit, export deficit, and the value of services and goods being exported out of India.
And when you look at as to why it's happening because a very interesting export out of Russia, import to India, and why shipping is becoming increasingly difficult for refiners who are trying to sell their oil to India. So that's where the complexity lies.
It's the European route again, right?
Exactly. So that's where the complexity lies, and that's essentially why the Russian oil seems to be becoming more and more expensive. You know,
but I think there is pressure on Russia and the G7 to hammer up prices up to the market average of about $65 to $70 billion. I think Russia has been able to evade sanctions up until now. G7 and the rest of the world also believes that there is there is only a point until which sanctions are going to work and sanctions should be implemented. I think over time all these sanctions are also going to perhaps ease out, though there is no end to the war, even as we are 150, 160 days, maybe more into the war. There is, 1 year and 1 year and about 100 days or so, right? So there is no end to that war. But add to that other complexities of these sanctions, also having an expiry date, having a shelf life, and the pressure on OPEC Plus and the overall damage that is going to do to import of oil across the world, not just India, is going to hurt the rest of the world as well. So overall, this pressure to level up Russian oil prices to about $70 per barrel is going to be bad news. It's going to be okay. It's going to average out for the rest of the world, but bad news specifically for India, which was quenching its oil thirst through Russia.
All right, India seems to be losing advantage there. But another interesting point that I was reading this morning, Karthik, and that is if the oil prices do not level up, if they continue to remain low, we could be losing all that discount after all if the gap between the G7 price cap and the current Russian oil prices narrows further.
Exactly.
Which means we lose out on entire discount.
Exactly. So we are losing out on discount. So that means our imports become expensive and our exports to these European markets also by default become expensive because your raw material price goes up. So you tend to lose on both sides. More expensive imports and exports which are not paying you as much.
Right.
So overall, the whole balance is going to tilt in the negative for India.
It's not lucrative thereafter to buy from Russia.
Not at all. So that's what I'm saying. So this 40% that we bought last year, maybe we'll split it then equally between Russia and the rest of the world, because if the prices are the same, it's not going to really matter as much to us on where we are importing from if the price is the same.
Of course, and that is the big story. We'll keep tracking here. We don't know whether India is going to keep importing from Russia in the future, given that it's becoming increasingly non-lucrative for India to buy from Russia. They're losing out on the discount, and that too by as much as 87%. Remember, if the price gap between the G7 price cap and Russian oil narrows further, it becomes more lucrative for India to buy from other countries and not just Russia. We'll of course keep tracking oil prices for you if they increase at all in the months to come.